What if I told you your Dubai property could secretly be your emergency fund? It could bail you out of a financial crisis without selling, without borrowing, and without begging the bank. This isn't a clickbait. Refinancing, done right, is one of the most underrated financial moves in the world and in the Dubai property market as well. It's not just about saving money on your interest rate. In today's video, I'll break down exactly how refinancing could inject cash, lower your payments, buy you time, and literally rescue your investment strategy, just like it did for me when I was stuck. Drop a thumbs up, subscribe, and let's get into it. First things first, how does refinancing work in simple terms? The basics of this concept is that you replace your current loan with a new one, either at the same bank or a different one, with better terms, rate, tenure, and structure. Usually, such refinancing is known as a mortgage buyout. Swapping your loan, another bank buys it from your current bank, and you get better interest rates and tenure. While doing so, you can also cash out or have an equity release. You can unlock built-up property equity, which is usually 60 to 80% LTV, as cash to pay debts, to fund new investments, or to simply renovate your other homes. You essentially pause or clear the old loan and continue under new conditions, with options tailored to your financial strategy. And also, in many cases, you might be fixed on your current loan for 3 years, and then the rate becomes variable, so you want to lock in another fixed loan, and that's exactly why you would do this. Finally, my favorite one, you can even refinance a home that you fully paid for and own 100% already. Let's take a 20/80 LTV scenario. Here, you basically sell 80% of your property to the bank, register a mortgage on your property, keep 20% equity as an owner, and receive 80% as equity or cash out from the bank. You get money out of your property and essentially start paying your monthly installments as a typical mortgage. This doesn't only unlock capital to be used for other investments whatsoever, but gives you a very cheap and affordable loan at around 4 to 5% versus personal loans at way higher rates, way lower amounts, and very short tenures of about up to 4 years. It might sound hard, I get it, and it's not so straightforward. But if done right, this is a gem strategy that and trust me when I say that, every millionaire uses. Now, if you're thinking about refinancing or equity release and you're stuck, you don't know how to actually approach this, don't guess your way through it. Through Agora Advisory, my consulting company, I offer tailored step-by-step guidance to navigate Dubai's property market with confidence. The UAE property buying process package, once limited to select number of clients, is now open to all of you investors who are looking to make safer and smarter decisions. And for those of you who are watching this video specifically, for the first time ever, I've decided to open up a limited number of free 15 minutes calls where we'll get to know each other and have a discovery on our services, and will only last for a week. No commitment, no pressure. Just a quick chat to see if I can actually help you and whether we can actually work together. And why I'm doing it now is because it's summer season and we are actually able to get really strong deals, distress sales, and so on for you. And I truly don't want to miss those hot deals. July is full and August is booking fast. So grab one of this free 15 minutes call with me while they're still available. Links in the description. Book your initial call today and let's make sure your investment is a sure and secure one. At first glance, refinancing your home, especially in Dubai, seems overwhelming. That's why let's get into details and see what type of refinancing could you actually go for. First one is rate switch or term switch. And that is pretty straightforward. You own a loan, you have one that you have to pay monthly, and it's at a rate of, let's say, 4.5%. You then decide to switch the bank or refinance it with another lender for a better rate of 3.7%. and that is a rate switch. Alternatively, you might be interested in switching your term. So currently you have a mortgage for 20 years, but you still have the ability, you're still young, and you still have some years to switch it to 25 years. And that's exactly a term change type of refinancing. The second type is a cash out refinance. An equity release loan is also known as a loan against your property in the UAE. This type of loan allows you to borrow a large amount of money against your property as collateral. You take advantage of the home equity that you've accumulated or the proportion of the property that you own. For example, having 100% of the home's equity means that you paid it in full and you actually own the property on the title deed. Through an equity release loan, you can release some of the equity that you've built up and still continue to own that property on paper, instead of waiting for you to sell the property, get the money back, and only then be able to use it for other investments or any other life situations. It's a very interesting and super strategic way to tap out into 60 to even 80% of your property's equity as tax-free cash for consolidated debt or newer investments, or you simply want a new car and you want to get some cash to finance that on a very, very low interest. And the third one is a buyout plus cash release or equity release combo. In this case, you mix the best of the two worlds. You get some lower interests and you also get some money back or equity from your property. This is an ideal strategy when your property's value has risen significantly and you simply don't want to sell it. You just want to get some more money back and reinvest it into other properties, or you want to renovate the other properties that you own, which is the best strategy in my honest opinion. And you simply don't want to sell it because you don't want to lose this property. Perhaps it's bringing you really good rental ROI, so you just want to continue doing these results, but you don't want to lose it. This honestly can be a win-win in both short-term and long-term if you carefully consider your finances and market conditions. And yes, many of you might say that eventually you will end up paying more interest for that property and you're also depending so much on the bank. However, usually just by doing this and from practice, I know that if you rent this property out, and specifically if it's on a 2080 LTV, your mortgage payments will always be covered by your tenant and you will still have a pretty significant portion of profit left after that. So why is this a lifesaver in Dubai specifically right now? There is cash injection on demand. My own experience, equity refinance has actually helped me to pay out some of my accumulated debt on my credit cards and free up cash for a new venture and another investment. So leveraging this kind of refinancing strategy towards paying out my debt, which was definitely way more expensive, at least in the long term, as credit cards charge you quite a hefty amount of interest, has helped me to actually pay less interest on a refinanced mortgage and also close any other things that were really piling up in my head and giving me a big headache. You also get lower interest rates and flexible tenure adjustments. And why is that important? Because you can extend your tenure and actually have less to pay every single month and actually enjoy some of those profits. Specifically, if you're an investor, you don't do it for yourself and you actually rent that property out. So imagine if you now pay 3,000 for your mortgage and you extend the tenure, you start paying 2,500. That's simply another 500 dirhams in your pocket every single month as profits. Some other lesser known benefits associated with this strategy is that there is a DLD cap on penalties, meaning that refinance cost is actually capped at 1% and up to 10,000 AD, which is manageable even for smaller borrowers. Time on your schedule flexibility, meaning that you can actually do it whenever you want. You can consolidate high cost debt, which I previously mentioned. You can close some of your pending credit card payments, which will definitely stack up there. Some banks offer no fee refinance options, so you don't actually need to pay anything for that. You're only actually benefiting from that, as banks also compete with each other in today's market, and they want to actually be the one who are the end beneficiaries to your loan. And finally, it allows you to preserve liquidity, especially in today's market where so many opportunities arise at whenever and wherever. Especially in Dubai, you keep cash in hand for other investments. That's a small leverage strategy in Dubai's tax-free environment. If you understand equity payout and use it wisely, refinancing becomes your hidden financial lifeline. Now, I want to quickly introduce Silver Springs Properties, my newest trusted agency partner in Dubai. As you know, I'm highly selective with my agency partners. Thus, I chose to represent Silver Springs, a boutique agency firm that, like me, believes in data-driven, transparent advice, not just sales pitches and hype. The founder, Nazir, actually reached out to me after following my content for quite some time, and we instantly clicked because we both approach real estate with the same mindset: data, transparency, and long-term thinking. Same as me, Nazir's got a background in finance, holds an MBA, and treats property investments the same way he treats his own money. Silver Springs was founded to help investors and end users to make smart and financially sound investment decisions, whether you're looking at off-plan, ready, and resale units. If that's something that you value, I'll leave all the links in the description so you can reach out to them. Now, here's a life-saving real example when refinancing actually saved me. When I was caught short for closing another investment, I decided to pull out some cash from a completely paid off unit. Sometimes life happens, even for me, when I try to be as financially driven and focused as possible. And while I've never done it before at that stage in my life, I still decided that that is something I really want to try, and I didn't really see many implications that would actually disadvantage me. The deal that I was working towards completing was so good that I really didn't want to lose that. Moreover, I've already paid some small down payments to reserve that unit, and I also didn't want to lose that money. This refinance actually helped me to fund 2 new deals and saved me a lot of interest that I would have paid to banks for a credit card, a personal loan, and anything else except this refinancing strategy that I used. It kept my momentum going without damaging my credit cards or any kind of borrowing limits. Yes, eventually I didn't own that other unit in full. I owned only 20% of that, as I got the maximum of 80% LTV equity release. However, I was able to cash out and leverage that money to actually get 2 other deals that later in life paid me 50% per year. And that is because it was a superb deal and I was the first investor in that tower, and I really benefited from a very good price per square foot. And that is again exactly why I emphasize on the importance of refinancing, or at least understanding the basics of it. Now we spoke about all the good stuff, let's go to the risks of it. First of all, there are closing costs that you have to watch for. Even capped besides the DLD and the trustee, always run the math, because closing one mortgage or one type of loan can actually involve some additional costs that the banks might not really disclose or make them so highlighted in their documents. So just run the maths, ask everything you need from your banking advisor, and only then proceed with your refinancing. Number 2 is the lender limits. Some banks restrict the LTV for expats or for commercial deals. So always check your eligibility first before planning any kind of refinancing deal. Also, not every lender in Dubai actually allows equity release for you. So definitely check the right banks and lenders who actually are able to give you that cash out without requesting too much documentation and making your life actually harder. In my specific case, I know that Mashreq used to give really good equity releases and also DIB and some other smaller banks. Usually the larger players, they would be more complicated and they would actually ask for so many questions before actually accepting you for this type of refinancing. Another one is the long-term cost. Extending your loan reduces your monthly outflow, but of course, as mentioned earlier in this video, increases your total interest that you have to pay. So if that is something that really doesn't work well with your long-term strategy, then you should consider that as well. Finally, it's not a fix-all kind of tool. Refinancing is just a good tool, and it works very well when you understand exactly why you're using it and have an accurate and exact plan for the cash that you're extracting. So what's the step-by-step process to do it right? If you already have a mortgage, then first is to review your current term, rate, and early settlement costs. Step 2, shop quotes from multiple banks or brokers. Number 3, you have to choose your refinancing strategy: rate switch, equity release, or the combo. Step 4, compare all the costs versus your monthly saving. Submit the application and proceed to the valuation of the property. And finally, sign the new loan documents, settle the transfer, and if you did the equity release, use the funds wisely. And yes, overall, this sounds like 6 very simple and straightforward steps. It's definitely not like that in real life. It will take quite a long process, maybe 1 to even 3 months, and you really need to know what you're doing. And that's why reach out to me and I'll be able to help you with this process, as I've done it over 10 times and on 3 continents. Refinancing in Dubai isn't just a switch, it's a financial toolkit. Cash extraction, interest rate reduction, tenure manipulation, and negotiation power. Use it strategically to survive tight cash flows, finance new investments, or lock in better terms. Always weigh the costs versus the benefits. And again, if you're unsure, consult an expert. With that, I hope you found this video helpful, and if you did so, please leave your thoughts in the comment section below. Like this video so more people can actually see it and perhaps use it in their investment strategy. Subscribe, and I'll see you in the next one.